Managing Director of Equity Research at Barclays Capital. We also have Harry Rady, CEO and Portfolio Manager at Rady Asset Management. Thanks to both of you for joining us. Adam, you think that we're moving away from healthcare reform and just to an expansion of coverage. How does that change your investment at Thesis?
Sure. First off, thank you for having me. Well, I guess, really what we're seeing now is just we really have moved away from this concept of truly reforming the system. There's a lot of very difficult things that would need to get done in order to truly reform the system. So instead, I think Congress is doing the best thing they can do right now, which is just look to expand coverage. So what's being proposed would give coverage to 96% of the citizens of the U.S. So certainly, once again, this idea of expanding coverage and finding a way to pay for it to reduce the number of uninsured.
But Harry, what I don't understand is how do you invest in this environment? And Mary was just showing us all the stocks that are going up, but there's so little certainty. We don't know what's going to happen. So how do you know how it's going to turn out with these stocks? Why would you even invest in this sector right now?
We're a contrarian deep value investor, and the more uncertainty there is and the more blood in the street there is, the more opportunity it creates. These stocks have been decimated for the last decade. The expectations are dismal, and then with the healthcare bill adding additional uncertainty, it just creates opportunity to buy these stocks at basically half price. They've got pristine balance sheets. They've got product pipelines. The opportunity is extraordinary.
But Harry, if they've been beaten down for 10 years, why do you think this is the end right now?
The sentiment or the tide is changing. This healthcare bill is really, we think, the turning point. And whether the whole sector benefits or not is really unimportant to us. We're bottom-up stock pickers, and so we think we've identified some very attractive companies trading at unbelievably low multiples that we think will do extraordinarily well in any circumstance.
But Adam, one of the basic tenets of healthcare reform is that health insurance companies are making too much money. Everybody is making too much money. You've got to cut fat out of the system. Isn't that bad for all of these stocks?
Well, sure. It's very challenging as you think about it, but clearly there's been a huge overhang because of healthcare reform. Everyone is very scared about it. So as a result, getting something finalized that's more middle of the road would be a perceived positive. It would certainly help for the earnings multiples.
Adam, you like hospitals. How come? Why do you think they're going to be the winners?
Yeah, well, with hospitals, right now, they're really suffering from the big uninsured population, with close to 50 million people without health coverage right now. So as a result, more people getting coverage is a good thing for hospitals in the long term, and the bad debt will certainly move down. And at the same time, hospitals are benefiting from reduced operating costs. So we think there's a good opportunity, and valuations are very low.
Harry, you like one of the clear winners. Those are companies with a portfolio of patent-protected products. Like what? Give me some names.
I think our favorite pick is Cephalon. Cephalon is trading at 9 times earnings. They've got a pristine balance sheet. Historically, the stock is traded at anywhere from 15 to 20 times earnings, and it's trading at 9 times earnings. There's some uncertainty as they transition their largest product, Provigil, to Nuvigil, and we think that that's going better than the market is giving them credit for. And tomorrow they're having an analyst day, so we think that the conversation, the timing is appropriate. We also like Boston Scientific. Boston Scientific has done a wonderful job of destroying shareholder value over the last 5 years. But they brought in a new CEO about 4 months ago, and he has an extraordinary track record, and we think that he's going to turn this company around.
Adam, who do you think are the losers in all this?
Well, I'd rather tell you who the winners are, because certainly, as I was just saying with the hospitals, it's hard to say. Everyone's very negative around managed care, but certainly, as I said before, the stocks are down a lot, so there could be opportunity going forward. So I'll just mention some winners, I think, which ones, again, would be the hospitals. Really like names like Community Health, Universal Health Services, Tenet Healthcare. I think there's big opportunity.
All right, we're going to leave it there, Adam and Harry. Thanks to both of you for joining us. I want to go to Bob Hassani. He's got some breaking news right now. Bob.
And let's put up a Union Pacific and Norfolk Southern.